Can we and should we see another gold standard? This is the main theme of our discussion with Jan Nieuwenhuijs, gold analyst at the Gold Observer. Jan, welcome to the show. It's a pleasure to have you on Kitco.
Thank you, David. Thank you very much for having me.
Let's start with talking about a gold standard. Can you give us a brief history of the last gold standards we've seen and why you think we might return to one soon?
Well, a gold standard is more or less a disciplined system where countries peg their currencies to gold. And it more or less brings discipline into the system, and you tie the currency supply to gold. So there isn't much room to print unlimited amounts of money as we're doing now, which is very destructive for an economy. As you can see now, there are a lot of financial bubbles, there are excessive debt levels, inequality is rising, you get moral hazard, and all these side effects of a fiat money standard are not really what we want, and eventually you get a lot of monetary instability, and I think then at that point we have to get back to a gold standard.
Right. So suppose we go back to a gold standard. What are the problems do you think that will be fixed in our monetary system?
Like I just said, it will bring discipline back into the system. So all this trying to manage the economy and trying to save every bank or company and not allow creative destruction to do its work to keep the economy healthy, that will be over, and it will be more, if we get back to free capitalism, it will be more like a self-regulating system again.
So why do you think we need to return to a gold standard now? If you look at the history of, let's say, just the Bretton Woods Agreement, one of the reasons why the gold standard was introduced back then was to stabilize currencies. Do you think we need to do that now? Do you think we have a problem of out of control currency appreciation or devaluation right now?
I think we should do it now, but now is not the best moment because we're in the midst of a pandemic. So it's probably best to deal with this pandemic first. Now, I'm not an expert on the pandemic, but there's a lot to say for that. Governments need to spend a lot and support the population until we have this figured out. So I would say going back to a gold standard maybe in a few years from now, but not now.
How do you think this would happen? What is the transition from what we have now to a gold standard?
Okay, so the main problem we have in the economy right now is the massive debt overhang that is predominantly in the developed nations. Government debt, but also corporate debt and private debt is very high, and it's at record levels, debt to GDP levels. So to get rid of that, you can do several things, or economic growth, austerity, raising taxes, but also debt restructuring and inflation. Now, economic growth is not going to happen anytime soon. Austerity and raising taxes, I don't think those are options either. So I think it will be a combination of mainly inflation and debt restructuring to lower the debt burden. And if that is behind, if we have lowered the debt burden, we can get back to a gold standard.
Okay, but why specifically a gold standard? If we're talking about just maintaining financial discipline, why not peg it to, let's say, Bitcoin or any other asset? Why does it have to be gold?
Good question. I think it will be gold. It doesn't matter to me what it is. But the thing is that gold is the most evenly distributed financial asset without counterparty risk across the globe relative to GDP. If you look at this distribution, it's quite even. And European central banks have even supported the equalization process in the past decades. So get a monetary reset. You start over with the new system. What you need is a new anchor that is evenly distributed. For example, if you play a new game of poker, but one player has all the chips in the beginning, it's not a fair game. Just like if we start over with a system and one, let's say, country or let's say the Eurozone has all the gold, of course, that would be an equitable and durable system. Now, gold is very much evenly distributed relative to GDP. So I think regarding that, it's the most suitable anchor for us to get back to.
I think free market advocates would say that, hey, maybe having a gold standard is in the best interest of capitalist societies because we want the freedom to devalue or appreciate our currencies according to our own monetary policies, right? Shouldn't that option still be on the table?
Yeah, I think it's a very good question or remark. I think that devaluations are a part of life. And you have seen throughout history that also on gold standards, there have been devaluations. So like I perhaps said in the beginning, I think we will go back to a gold standard, but I do not know how that gold standard will be structured. There are several options for a gold standard. You have the classical gold standard, but you also have, let's say, gold price targeting by central banks. If you get gold price targeting, then central banks, the only thing they would do is target the price of gold, and that would be their monetary policy. And if you have a system like that, it's much more easier to devalue. It will be different than the classical gold standard, because on a classic gold standard, you can go to the, let's say, central bank and say, I have a banknote here, I want my gold. When it comes to gold price targeting, you don't have that. The central bank has gold and it has a currency, and it just tries to interfere in the foreign exchange market to stabilize their currency in terms of the gold price.
So Jan, we're seeing countries around the world go on a race to the bottom with their currencies. Everyone's trying to devalue. So what you're saying, if I understand correctly, is that they're doing this because they want to reduce their debt by increasing inflation?
Yeah, that is exactly right. Devaluing against other nations can be beneficial sometimes, but what they actually want in the US, in Europe, but also in Japan is consumer price inflation. And preferably with interest rates at or below zero. So you get deeply negative real interest rates, and that washes away or lowers the debt burden. And that, of course, will get us out of this debt trap, because the amounts of debt now are suffocating. And if you have a lot of debt, you can't spend, and it's making the economy stuck.
Do you think this will be effective? Do you think we'll actually get inflation from this monetary policy?
Yeah, we will get inflation because governments they can bend the rules, they can change accounting rules, they can create new money. What we see now is they're setting up these central bank digital currencies, because let's say the traditional monetary transmission mechanism isn't working anymore. So what they're doing now is creating digital currencies to send to people directly so they can spend them, and that will be another tool for central bankers to boost inflation.
Okay. Do you agree with this new initiative, the digital currencies? I know earlier this month, the ECB has put out reports saying that they're contemplating issuing digital euros.
Well, I don't agree with. It's all a problem, right? I mean, we're in a financial mess, and it's very hard to get out of this. Gold can offer some solutions, at least for people, as a store of value. But the scary thing, of course, about central bank digital currencies is they're going to compete with commercial banks. I mean, if there are digital currencies, digital euros or digital dollars, I mean, who would still hold his fiat currencies at a commercial bank if you can get digital dollars or digital euros? Now, they already said that they want to try to limit the amount they can hold and put all sorts, but this is all financial repression. So it's all actually bad, but yeah, we're in a bad space. So it will hurt anyway to get out of this.
Let's talk about your gold price outlook now. Let's talk about your long-term outlook. Offline, you were telling me gold could hit $10,000. When would this happen? What would the drivers need to be for $10,000 gold to be in the system?
I think $10,000 gold can happen, and it will take probably about 5 or 10 years, and it will be part of the monetary reset. If you look at the gold price nominally, of course, doesn't mean much. You have to look at the real gold price, and you also have to compare it to other let's say, financial assets. So if you look now at the value of all the gold in the world versus global financial assets, I think the gold represents about 0.5% of global financial assets. So that's very low. In 1980, it was 3%. So it can go a couple of times higher, gold. Also, in terms of international reserves, at the moment, gold is about 13% of global international reserves. And in 1980, it was more than 50%. So those things tell me that gold has a long way to go, especially if we go to a new gold standard. Then I would assume that gold takes up the majority of international reserves, so that we would be more than 50%, and gold can rise significantly from here.
You mentioned the term monetary reset. What do you mean by that?
A new monetary system. So what we have now is a fiat monetary system, and globally it's the dollar standard. And if you get a reset, we'll switch to a gold standard, or we get a multi-reserve currency system. That is also possible. That let's say gold is the sun in the monetary cosmos, but you have a few reserve currencies floating around that, or relatively stable versus gold. These are all options. But yeah, that all would mean a reset. By the way, a reset can also include some debt restructuring. Maybe they, close the banks in a weekend, and they say we're going to have a little meeting with some big nations, and they decide on a new monetary system, and some new rules, and some debt restructuring.
Okay, so Jan, let's talk finally about silver now. You wrote an interesting report criticizing the Silver Institute's reports about silver balances. And just to give a quick summary, they issue these reports for data on the supply and demand, and you're saying that this is very misleading and the report as a whole is useless. You actually use that word in your article. Can you explain why you think that?
Yeah, how they present silver, the Silver Institute, in their supply and demand report is they make a balance of annual supply and annual demand, and then the difference is a surplus or deficit, and they kind of suggest that a surplus or deficit is going to make the price rise or fall. Now, that is not the case with silver, because silver trades more like a currency. There is a lot of silver above ground. So that makes it have a high stock to flow ratio and trades it more like a currency. For example, if you compare it to corn, which is a perishable commodity, you have what is annually produced and annually consumed, and the price is set between the forces of those two. But with silver, there is so much above ground supply that annual mine supply has less of an impact on the supply and demand balance, so to say. I hope that is clear for the viewers. But for monetary metals, there can't really be. Sorry for my English. There can't really be a surplus or deficit because there is so much above ground supply.
Okay, let's talk about that. Why do you think silver is more of a currency than a commodity? Maybe more of a philosophical question.
Well, because of the high stock-to-flow ratio, because some people think, and this is what the Silver Institute says in its reports, they say the above-ground supply or silver inventory is 80,000 tons. Now, in reality, what is above ground in terms of silver is 1.6 million tons. 800,000 tons of that is in industrial products, but 800,000 tons is also in jewelry, bars, coins, etc. So you have a lot of above ground supply, and if you read the Silver Institute report, you think, oh, it's there's above ground supply is very small, so a small uptick in demand can cause a lot of a price rise. But this is misleading because there is a lot more above ground silver, so it should be viewed from another angle.
Okay, so Jan, if you look at the most recent Silver Institute survey report, they're forecasting a surplus for silver this year in 2020. Is this useful information at all for investors who want to predict the silver price?
No, I don't think so. They mention a surplus, but it's the surplus or deficit numbers by the Silver Institute are useless. if I have looked back for 20, even 30 years on these market balances by the Silver Institute, and I've plotted every deficit and surplus, and then saw if it correlated to the price. And it correlates to the price, let's say 50% of the time, which is just basic luck. And it makes sense again because silver is a currency, and because of the high stock to flow ratio, these surpluses or deficits are quite meaningless in my opinion. So they say there is going to be a surplus, but I'm rather inclined to say the price is going to rise.
Okay, perfect. Jan, I'd love to follow up with you again soon to talk about silver and gold prices, but thank you very much for coming on the show today. I appreciate your thoughts.
Thanks for having me.
And thank you for watching Kitco News. Don't forget to download the Kitco Gold Live app for price charts, updates, and news. I'm David Lin. Stay tuned for more.